Hello again, Hugh Gartizer here. Say if you're a real estate agent out there in America somewhere working hard every day trying to sell homes, and you're watching this video, you made it to my website, what I want to do is just tell you that I'd like to have you look at this video. Consider selling your homes from people or clients that contact you that are in a troubled situation or any situation where they need to move out of their home quickly. Okay, the people or clients that you get that have equity in their home and they're trying to sell their home, they're motivated to sell it because they want to upsize or downsize, and they're motivated on their price because they have lots of equity. Those are the people that I'm not really interested in. Those people are healthy, they're doing good, they're moving on, but the people that I'm interested in is when you get clients that are in a mortgage situation or a situation that they have to move out of their house quickly. Okay, I'm going to run through this slideshow. I'm going to have a video. You're going to listen to a mortgage title company officer who handles these types of transactions that are subject to. Okay, I buy homes that are subject to the existing mortgage. And you're going to listen to her, and at the end of this scenario I'll come back and we'll take a look at I'm going to give you a link to a place on my website that's a secret link that has a form. If you do run into someone, you'll be able to fill in all the dots and all the information, quickly email it to me, and I will get back with you very quickly to try to purchase these homes that you may have for sale. Okay, so take a look at this slideshow and I'll get back with you at the end. Thanks a lot. I'll be right back. Okay, let's take a look at what I'm talking about as far as motivated sellers are concerned. A motivated seller, the person that I'm looking for, you as a real estate agent, you have the eyes and ears out in the field. If a customer contacts you wanting to sell their home because they are in a troubled mortgage situation, that's the type of customer that I'm interested in. That's the type of home that I'd be willing to purchase. And I'd be willing to purchase that mortgage subject to the existing loan. Okay, so the purchase of the home is for the existing loan. Now let's just say I'm not interested in motivated sellers that have a lot of equity in their house and are willing to take a little bit less for it just to sell it. I'm interested in the type of client that you may have that is in a troubled mortgage situation. Okay, so let's say that mortgage they're trying to get out of is $190,000. That's what is owed on the mortgage at that time. Well, I would be purchasing the house for $190,000. I would be assuming their mortgage so that troubled mortgage client can get out from underneath the mortgage and move out of their home. Okay, so since I'm buying that home for $190,000, I would pay you 3% of that amount just for sending that client to me. Okay, that's $5,700 that you would make right then and there. So what have you done? Well, at this point, you've helped the seller to get out from underneath their house. They don't have to do a short sale. They don't have to have a foreclosure take place where the home goes back to the courthouse steps. And you've helped them get out from underneath their troubled mortgage. Okay, what else have you done? You've helped me. You've helped me by letting me know about a home that I can acquire and own without any money down. And you've also helped yourself by sending them to me and making 3% simply by referring that troubled customer to me. So that's what we've done so far. Okay, so let's take a look ahead. So if I strike a deal with the owner of the home, and I'm able to acquire that home for the mortgage that's owed, and the people move out and go on their way. So what do I need next? Well, I need your eyes and ears as the real estate agent. I'm down here in San Antonio, Texas. I can't be everywhere, but I can conduct this business actually anywhere in the United States. Okay, you're a professional real estate agent. You have a client. You sent them to me. I struck a deal. And now we're ready to, we have an empty home that I own now. And I'm going to need from you a BPO on that home, and which is a broker's price opinion, to get a valuation of that home. And I'm going to need that valuation to reflect whatever the normal amount is. I'm going to need it to reflect a 15% higher amount. And I'm going to explain why in just a minute. Okay, and then I'm going to need 5 comps from that area based on that home. And the 5 comps are going to be comparable house listings, of course, that have sold in your area, equal or equivalent to the home that we've just purchased. Okay, the 15% on the BPO is because I am going to make repairs to that home. I'm going to bring it up to speed where people who we're going to be showing it to won't have an opportunity to pick on anything. Okay, so the BPO is not of the value when the people move out. It's the value after I have done the repairs. Well, I can tell you that I'm going to paint, probably do flooring. I'm going to spend about $15,000 repairing that home, bringing it up to speed so that we can relist that home with you. You're the one that sent the home to me. You're the one I'm going to call to relist the home at the highest market value that we can obtain from that area. Okay, so let's take a look at the next frame. Okay, we have a home that I purchased for the mortgage of $190,000. Okay, I'm going to continue to make the payments on that home, but what I'm going to try to do first is I'm going to try to relist it and sell it to another buyer. Okay, so if we add the 15% to the home, the BPO should reflect a cost, a valuation of that home of $218,500. That's going to be the relisting price. Okay, the people that I'm trying to attract, the buyers, it's going to be a no qualifying loan because there is no qualifying. The loan is already in place. We're going to be working off of those numbers that are already in place because that's the mortgage that I'm going to be paying on. Okay, it's going to be an owner finance with 10% down. So now we have people that don't have to go traditionally to a mortgage company and get a whole new loan. The loan is already in place. If they have a 10% down payment, that's going to reflect $21,850. Okay, if they want that home, they don't have to qualify. They have the down payment, and I can just quickly verify their income. What they're going to be refinancing with me is $196,650. That's going to be the new buyer's mortgage with me. Okay, now let's look at the next frame. The new buyers that come in, they're in exchange for no qualifying, easy to get into this home with 10% down, not 20%, 10%. Here's what we're going to do. Okay, I'm going to pay you, I paid you 3% when you sent me the home. Okay, now I'm going to give you if you're the listing agent and you bring the buyer, okay, you have someone that wants to buy that home, your sign is in the front yard. Okay, you can list it on the MLS or you can just let people know about it locally. If you list it on the MLS and a buyer comes with a real estate agent, you're going to need to split that 6% with them. Okay, if you list it on your own and bring the buyer to me, I'm going to pay you 6% on that $218,500. Okay, so what did you make off of this home? Well, it's not just 6 or 3%. You've made a total of 9% round trip of $18,810 simply by helping me with what I need to get this home back purchased and then back on the market. Okay, that's paid to you from the down payment of the new buyers. all of that commission. I'm going to be getting $21,850 down. And out of that money, I'm going to pay you. I'll have a contract with you. It'll all be handled through a title company, just like you normally do. I'm going to pay you $18,810. That's based on these numbers and the scenario that I'm giving you. Of course, it'll be a little more or less depending on what we purchased the home for and what we relist it for. But you can kind of be assured of a 9% total if you handle the whole deal. If you list it with a real estate, put it on the MLS and another lady comes in, that 6% is going to be cut in half. That's pretty much a standard scenario. Okay, so that's all paid from the down payment. Now from purchase, getting the old people out of the home and getting the new people in the home, well, that time frame is based on how quickly we can get this done, how quickly the repairs can be made, and how quickly we can relist it. I'm looking at 3 to 4 weeks. I'm ready to go. I'm ready to do these deals. It's all going to be handled in a title company, and you're going to be hearing from a title agent officer in just a few minutes concerning this, because the concern always is this a legal type of transaction? Okay, so let's look at the next frame. If you put your sign in the yard and the house is ready to go, we have someone that wants to purchase the home or know some of the details. At this point, here's what you can tell them based on this scenario. We got a home that's for sale for $196,650. I'm sorry. If we find a buyer and they're interested in buying the home, they have the 10% down. What they're financing is $196,650. Okay? If that person just has fair credit, if they fall in the fair credit area of 580 to 699 on their credit score, which is most people who are purchasing a home that have had a little trouble or behind in their payments, but they have the 10% down. That's very important, of course. They're going to get a home that they can get into with no qualifying with an APR of 6.25%. That's what I charge. The taxes on the home roughly are going to be about $3,000 on that size of a home at that price. The insurance included is $1,500. The annual PMI is going to be about $500. That person's monthly payment is going to be $2,141.71. That's based on this scenario. And that's a 15-year loan. I won't do 30 years. 15 years. So that's the scenario the buyer is going to be looking at. They can get in the home quickly. They have 10% down. There is no qualifying. These are the numbers based on the home that I'm showing you here. And their monthly payments are $2,141.71. Okay, that's what they'll be looking at. They can refinance that home or they can pay it out over 15 years. Now then, let's look at the next frame. Here is the question that some people have. Is buying a home from a motivated seller subject to the existing loan and liens legal? Well, it absolutely is. As a matter of fact, mortgage companies are saved enormous cost over the traditional method of foreclosure or short sale from a motivated seller that's in trouble on their mortgage. Take a moment to listen to this 30-year veteran of a title company officer located on the West Coast as she explains the processes and the information that they use to close these type of transactions.
We're here with Cindy at a title company in Basically, and Cindy's not closing my deals, right?
No, sir. I'm closing all of your associates' deals.
My associates,
right.
no, students' deals. So basically, what happens is Cindy is an expert here at the title company for closing subject to deals and closing also wrap mortgages, all inclusive trust deeds on the resale side. So many people think like that subject twos are illegal, that you can't do it.
Well,
can you do them?
and the thing about that, I've been in the business for over 30 years. Subject twos and wraparounds were very, very popular in the 80s, and I closed them, quite a few of them, because interest rates were at 14%, money was tight, and it was the only way to move real estate. Unfortunately, we have seen that wheel come around, and so yes, we're seeing them not just for you, but finally, we're educating realtors on that. Yes, these are kind of some creative ways that you can do them, but they are not illegal. The most important thing is documentation. Having everything is open, above board, having the right paperwork out there in place to protect both the buyers and the sellers, and from a title insurance perspective, having the transaction closed in the offices of a title company. These are not kitchen table deals with people with cigars hanging out of their mouth saying, "Don't worry, baby, we can do it." They are, a legitimate real estate attorney prepares all of the legal documents that are executed. I insure these transactions, and my underwriter is one of the strictest in the nation, and believe me, we would not be closing them without their blessing. I currently have the Department of Insurance in my office doing an audit as we speak. She's back in the corner, and she was very interested in your all's deals. And so from a perspective from the Department of Insurance, these deals pass her muster as well. So that is the importance of, those are all the keys that make these things work.
Yeah, so they do work.
If you're concerned or you have questions, you can always locate a title company, either someone that you currently use or people that you can just pick up the phone and call and ask the question to see if they're willing to close these real estate transactions subject to the existing loan. In other words, you have a client with a troubled mortgage or a situation where they have to exit the home, they have a mortgage that is pending. You have a buyer willing to catch the mortgage up or continue to make the payments with subject to the existing mortgage. You're selling the home to a buyer simply subject to the existing mortgage. Okay. Keep in mind that disclosures are the key to these transactions. As long as the seller is aware that they will no longer own the home, it's legal. Okay, it can be insured and it is legal. The alternative is mortgage disaster. And what we're trying to do is we're trying to keep the mortgage companies healthy, prevent them from taking over these homes, getting them back, spending tons of money to fix them up and try to relist them or sell them at a discounted rate. We want real estate agents to get the maximum amount of commission for the hard work that you do. So check with your title company. See if they're willing to do this, subject to, send them to this website, have them watch this video, do a little research from the legal department, and hopefully we can start keeping these mortgage companies healthy without having them take these homes over. Okay? Thank you so much. Okay, so there you are. You saw the video, you saw the presentation, you know what I do, you know how I do it. If it's something that you are interested in or you have a client, you want to know more about it, like I said, get a hold of me through the contact form on this website, and I will get right back with you. I'll provide you with a link that has all of the information you can fill out. If you have a home that's troubled, a customer that needs to get out or is already empty, and you're having trouble selling that home, get with me and I'll provide you with the link. It's very quick, it's very easy, it's very thorough. So if you have a little bit of time, you want to unload a house, we'll start with one, see if it works out. And if it does, then I'll have plenty more business for you. And we'll start moving these houses, keeping these mortgage companies healthy, and making the real estate agents the top commission on their sales, because letting them go to foreclosure and short selling these houses slowly is going to be a thing of the past. Okay, so thanks so much for watching. I hope to hear and see you soon. Bye bye.